Hey, welcome to the video. My name's David Lee. Glad you're here. And so I don't know if you're here to make money, if you're looking to maybe start an internet business or a home-based business, or for whatever reason, maybe a friend has just been bugging you to take a look at this video and see if it makes sense to you. Either way, we're glad you're here. So it's going to take about 7 to 10 minutes, depending, but it's just going to be an overview. And it's only the first step, our first look. And it's a concept that I really want to drive home to people before they actually jump into this industry. It's overlooked with just about everyone out there. And so I was fortunate enough several years ago to be taught what I'm about to show you. And again, this is nothing I invented, but a gentleman by the name of Sandy Botkins, he wrote a book, and I had a chance to meet him, but he wrote a book that's titled Lower Your Taxes Big Time. Sandy is a former IRS attorney, and he's actually a trainer for the IRS, or he was, before he jumped ship and started his own industry, teaching us ordinary folks how that we can maximize our deductions through a home-based business. And actually, in the very first chapter of his book, that I should have bookmarked, anyway, here it is, the title of the first chapter of his book is Why You Would Be Brain Dead Not to Start a Home-Based Business. Why you would be brain dead not to start a home-based business. That's coming from a former IRS attorney. Not to get into all the details, but he goes on to state that a home-based business, once you start, is worth anywhere from $2,000 to $10,000 a year in additional tax savings to you and your home. I'm not going to use his example of 10,000, okay? I'm not going to use 2,000. If you take the average of that, and so I'm dealing with averages, this is not unusual circumstances, but average savings of $6,000 a year just by starting a home-based business. That's a fairly significant amount of money, and how that's generated, it's not through new expenditures or profits or anything like that. That is actually a strategy of taking money that you're already spending that's in a non-taxable situation. By starting a home-based business, you actually just shift that underneath the business entity, and it becomes tax deductible. Stuff like your homes, you got a home-based or home office deductions that you can have. Your car mileage is a very big deduction. Some of your vacations done right can be tax deductible. Meals, entertainment, there's a very solid list of deductions that you can take advantage of. And you don't even have to wait till the end of the year to claim it and get $6,000 in. You can actually adjust your withholdings from your job to have them withhold less money out of your paycheck every time you get paid. And so that you could actually realize, if you divide that by 12, that would equal $500 per month. 6,000 divided by 12 is 500 per month in a positive cash flow every month to just by starting a home-based business. And again, it's important to remember, this is not me. This is Sandy Botkins, the IRS guy, the attorney, the trainer for the IRS, teaching this. And so again, I'm not going to get into the full details. I have another video explaining that. But $500 in immediate positive cash flow just by starting a business, that has nothing to do with profit. That has nothing to do with anything other than it's a financial strategy. Okay? So, that's pretty exciting in and of itself, but let me take that one step further. Do you know what kind of money you would have to have in the bank to generate an immediate $500 in positive cash flow? You would have to have in a bank CD $120,000 earning 5% to generate $500 a month in positive cash flow. How you looking? What for a new person would be easier to accomplish strategy-wise in finances? Would it be easier to save up, sweat and save up after-tax money, $120,000, put it in a bank CD at 5%, to draw $500 in a dividend, which, by the way, is then taxed at whatever income level it is. So even though the $500 dividend, you'd be taxed on that a couple of $100, so you'd only end up with $300. See, money saved is worth more than money earned, because this $500 that you get off of a tax deduction is a straight $500, not a dividend income. So it's actually worth more than a dividend income. So that's just one strategy. I'm going to take that one step further because the company that I represent, we deal with faith and family and finances and a lot more F's out there. Those are my three favorites. And in the area of finances, they go real hard look, and my spelling is not working, but we take a real hard look at debt. And most Americans have anywhere between $25,000 and $50,000 in consumer debt through credit cards, car loans, boats, motorcycles, furniture payments. I'm not counting your home here, obviously, but you get the idea. And that's costing them about $1,000 a month just to service all of this stuff. Money that's going out just to pay for stuff they've already purchased. Okay, what if one of the financial strategies that we teach is something called the debt snowball? That's where you take a little bit of money, kind of a little seed money, and you start attacking the debts. Okay, I have another video that explains it, but it shows that in about 2 years' time, less than 2 years, a $500 initial debt snowball that's monthly and reoccurring can wipe out all of this debt in a less than 2 years' time. So what does that now look like? Okay, that now looks like, instead of $1,000 going out every month, that's $1,000 of new positive cash flow that's staying into your house every month. Don't forget, you are still in business, so you still have your additional $500 in tax savings that's out there. That's $1,500 per month in positive cash flow that you have now month after month after month after month. What is that worth to you? That, to equivalent that in a bank CD, you would have to have $360,000 at 5% just to generate $1,500 in a dividend. And let's not forget, you would be taxed on that, so you'd probably only be able to keep a little over $1,000. What makes more sense? Saving up $250,000 plus to generate $1,500 in cash flow, or start a home-based business, follow the advice of a former IRS attorney, having a home-based business, utilizing the tax laws, and just being relatively smart with your money for a short period of time. That's going to generate this kind of income of $1,500. What is $1,500 to you? And that's the big question. What I just showed you is worst case scenario. This is not anything to do with profits in the business. You haven't bought, sold, consumed, you haven't done any of the things business related yet. This is just a financial strategy where having a home-based business allows you to take advantage of. Okay, so if that's worth something to you, if that kind of concept sparks something to you, get back with the person that invited you, and we can show you a lot more of what it is that we do, because there's a lot more money out there than this. We have people making millions of dollars in this industry. I know them personally, and then we have people making zero. I know a lot of them personally. People that make millions of dollars understand this basic concept that I just explained. The people that make zero do not. You now understand the basics of it. Have you learned enough and seen enough that you want to take it a step further? If so, get back with the person that invited you to do this video, get your questions answered, and we look forward to working with you. Take care.